All right, afternoon, everyone. 36 minutes, okay. Had to check my time. My video yesterday got cut off. I just let it, that's it. I got my point across in it, so I wasn't worried that much about it, but it did cut off. So I want to make sure that that does not happen again. Had to delete some videos and free up some space on my device. I have an Ask Mark Anything question for today's content. Haven't done one of these, in a little while. Most of the educational content that you guys see me release and put out are, frequently asked questions. The Ask Mark Anything questions are specific questions that people ask through the YouTube channel or through Facebook. As I come in contact with more people, the frequently asked questions are the ones that I put out consistently every day. But on occasion, I get a really good Ask Mark Anything question. This is an excellent question that's relevant to trading in general. And let me frame the question first, and then I'm actually going to read what the question is. But to frame the question, when is the best and the worst season of the year to trade during? When is the best and the worst season of the year to trade during? I think we'll just go with when is the best season of the year to trade during? When is the best season of the year to trade during? I'm going to talk about everything though. Okay. So, but this was the actual question. Let me just read it. Good morning. Reminder about the video about trading during the different seasons and if they are better or worse during different times of the year. So I had to frame the question based on that statement. Okay. Summer, winter, spring, fall. Throughout the year, the market is moving in cycles. What people don't understand about the cycles and the cyclical nature of the market is that they are only representative of volatility, which is the amount of activity that's in the market, or I should say, which is as a result of the amount of activity in the market. Volatility is created because of volume coming into the market in abundance. When there's a lot of volume, there's a lot of people putting money into the market, taking money out of the market, moving money around. When there's more than average activity, it creates more volatility in the market. When there's more volatility in the market movements are larger. The pip movements and the currency markets, for example, they go further. What might have been the average move during one time of the year, now at a different time of the year, the average movement is significantly larger. So, for example, in the summertime, historically, overall markets slow down because people that are in the industry who trade for larger institutions are taking vacations, people are traveling, people are moving around in the summertime. So a lot of people go on vacation, literally, like take vacation and travel. They're not in the markets at all. They're not dealing with the markets as far as what their normal trading activities would be. So this creates that historical cyclical shift in the market where the summertime there's less volatility, so the moves are smaller, and because the moves are smaller, when there is movement, the movement can be more exaggerated and the movements are sharper and more erratic. And this is something that people in this industry know that they have to deal with and confront overall when the summer months come. So a lot of them just take off and don't trade at all. But remember that I'm always going to bring this information and knowledge back to how it relates to what we do. So really the question that is being asked is, well, you know, do any of these cycles that the market goes throughout the years in a different season, is there any particular time of the year when it's best for us to trade? Any time of the year is best for us to trade, because we're always going to be connected and tied into the behavior of the market. Understand that that is a significant difference from being restricted or limited by cyclical overall movements of the market. We're not restricted by that. The market can be in whatever cycle it decides to be in. It doesn't matter. For one, we're dealing with 5-minute binaries. So there are literally opportunities throughout one day, every 5 minutes, depending on what it is that you're doing within your trading. So depending on the way that you're looking at the market, there can be an abundance of trades, or there can be very few trades, because the way that we trade is one where we only are interested in taking trades when the probability of us winning is so high that we win our trades. So in order for us to do that consistently, it means that we have to let a lot of things go. We're not involved in the majority of market activity. Most of the market movement and volatility that you see in the market, we don't got nothing to do with none of that movement, like at all. The behavior that the market presents when it has a lot of volatility in it is less stable and more erratic. That's the extreme opposite of what we're looking for. We don't want erratic behavior at all. We don't want swings. We don't want, you know, a bunch of movements that make no sense, especially not within a shorter time frame, like on a 5-minute time frame that you're looking at on the chart. 5-minute time frame is broken down into 5 1-minute segments of time. So when we're looking at the chart, we're looking at a 1-minute chart. So we're really looking at a 1-minute time. The time frame that we're watching is the 1-minute time frame, broken down into a 5-minute binary to be able to capitalize off of our knowledge of how to look at the market and interpret the behavior. This is what we do. So that question being, you know, do the cycles that the market goes through, out of all of these cycles, are any of them the best cycle? In other words, is any season of the year the best time of the year to trade? The answer is no. There is no best season. We can trade during any and every season, and we do. If the market decided that it would present us with more opportunities during a season where we wouldn't expect to have more opportunities, who are we to say, well, no, you know, it's summertime or it's wintertime, we're not supposed to be taking this many trades? We shouldn't be taking any trades right now because it's wintertime. Just because historically the cycle of the market that you're used to would present a market environment that you just are not comfortable with, and because you feel uncomfortable with that environment, you don't take trades during that environment, during that time of the year. There are people that don't trade during the summer. Like I said, there are people that slow down their trading during the winter months. It doesn't mean that you have to limit yourself, though, because depending on the way that you're looking at the market, that can mean something or it can mean absolutely nothing for you. For us, it means absolutely nothing. We're never restricted by anything. In fact, just the fact that the market is open means that a potential opportunity can be presented. But the beauty of what we do is that if opportunities are not presented, that's cool. Like, we're okay with that. We accept the fact that the market it will not give us all of these opportunities to trade because that's not what we're interested in the first place. We're interested in being consistently profitable, period. If that meant that weeks would go by with no trades, it is what it is. We accept it. That's not the case. But I'm just saying, if it were the case, if the environment in the market was one where we wouldn't have trades available for 2-3 weeks at a time, what happens when trades are available consistently on a daily basis? You see how it can balance itself out? You can get your trades when opportunities avail. When opportunities are not present, you keep your money in your account because you're not losing anything. You're not trying to force your way into an environment that you should not be in. You see the difference? And this is where the patience and the discipline comes in that I preach every day. Because you need to be patient to wait for the market to present opportunities based on the way that you're trading. And you need to be disciplined to not deviate away from your plan and the way that you trade. When you combine those two, now you're on your path. Stay on your path. Remain there. Don't deviate away from your path. Don't look at someone else's path and say, oh, well, this path over here, you know, they win in 80% of their trades. You want to go over there because there are more trades available for you to take? Is that why? But they're winning 8 out of 10. They're losing 2 out of 10. So now you have to deal with the dynamic of the average, because that average may not be reflected 8 consecutive wins and then 2 losses. You might have 5 losses, 5 wins, 2 losses, 10 wins to get that average of 80%. You understand what I'm saying? Like, people don't think of it in terms like that when they try to flip-flop over to something else. But you have to think in terms of that, because that's what's relevant. The way that it actually plays out is going to be totally different than what you're thinking. 80% doesn't mean 80% in a perfect world. That 80% can be broken down to however, depending on what you're doing. So any way that you look at it, it all boils down to you. It's just like if you are buying signals. If you buy a bunch of signals from a provider and the provider is giving you 50 signals a week, right? Out of the 50, you can only take 25. You already are at a disadvantage. What if out of the 25 that you took, 10 of them were losing trades? And you missed out on the other 25 trades that were available that you couldn't take. And that's where all the winners were. Make sense? You see what I'm saying? So unless you would be able to take all 50 trades and be able to literally sustain in your account to withstand any drawdown or any losses during that time for you to be able to take all 50 trades, unless you're able to do that, it doesn't make sense. And this is why when you guys subscribe to Signal Services and you take those trades and you get caught up in a losing streak, that you'll say, well, you know, their signals are bullshit and they don't work. It may not even be that they don't work. You were not in position to remain solvent in order to have money in your account still and willing to commit to whatever the amount of trades were that the signals came in, so that you can experience whatever the average is. In other words, be there to take every trade. Like, I'm just laying out an example and a scenario for you mathematically, which is one of the reasons why people don't succeed with signals, because you're not going to do that. You're just not. You're going to take whatever signals you can take, and you want all of them to win. They're telling you out the gate it's not 100% for their signals. They tell you this in advance. They're telling you, well, 75%, 80%, 85% of the signals are going to be profitable. All right, so the other 15% are not. But the way that you're taking the trades, you may just so happen to experience the losses during a streak of losers. But you don't take advantage of the profitable trades when they come, for whatever reason. And I don't even know how I got into talking about that, but it's relevant for what I'm talking about as far as the market cycles and things of this nature, because a lot of times signal services will base their determination also on different times of the year that they choose to trade. Like I said, some people take off completely in the summer. They don't trade at all. They'll take off from like May until August. They'll go on vacation in May. They won't come back into the markets until August. Is this what we do? Hell no. We're going to trade all year. And we're going to make money all year. We're going to be consistent, period. As long as the market is open, opportunity is available for us. And the beauty of what we do is that the opportunities come because we know how to interpret the market and its behavior. We know how to do it. And we know how to apply that specifically to 5-minute binaries. 5-minute binaries are rolling over every 5 minutes throughout the day. So there's going to be an opportunity when it comes. Oh, but Mark, I don't know about. Trust me, there's going to be opportunities, plenty of them. And next thing you know, because of the way that we trade and we have our money management, we don't need a lot of trades. All you need is the consistent ability to win, which we have, which we do, which we demonstrate, which we execute every day. And because of that, we're able to remain consistent. And that consistency is what puts us in position to scale up. So now we don't have to be concerned about taking all of these trades every week. When it's all said and done, you can take 1 or 2 trades a week. And the amount that you make in profit because of how you scaled up over time, you make more than anyone is making in the industry. Like literally. So, keep it in perspective. But anyway, I hope that this was valuable. I hope that you guys enjoyed that question. I appreciate the question. Definitely, there's more Ask Mark Anything content on the way. If you guys have an Ask Mark Anything question, feel free to post your question underneath the video as a reply. If you're looking at this on YouTube, if you're on Facebook, just friend me, send me a friend request. Let me know that, you have a question for Ask Mark Anything, and I will be more than glad to address your question in a video. If you are interested in training, you can train with us for $35 per month. Training is remarkable. I know that I say that all the time, but it truly is. And it's getting better. People are winning. People are becoming professional level traders because they're committing to the training. They're committing. That's what you have to do, is commit. Doesn't matter how long it takes you. Do it at your own pace. That's the problem with most people. They have the microwave mentality. They want it now. No, it's not going to happen now. It's going to take you time, just like everybody else. How long it takes you is up to you. How long will you commit to the training? Are you going to flip-flop? You're going to hopscotch? Going to come in and out of training? Let me cut this off before it cuts me off. All right, let me get out of here. Mark Fuller, TeamAlliance. I'll holler at you guys. I'll see you guys soon in training. Continue to enjoy the educational content that I'm putting out. The educational series playlist will be underneath this video as well if you're looking at this on YouTube. All right. Also, check out the 1-a-day challenge. And fastest way to reach me is on Facebook. You can also send me a text message, 914-979-2317. Mark Fuller, TeamAlliance. New York City, I'll holler at y'all. Peace.